morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Wednesday, July 2nd. A mixed trade here overnight. Once again, bean oil is the upside leader, currently trading about 70 points higher in the August contract. Beans are 4 to 7 better. Meal is down another buck or two. Overnight marks the 8th consecutive session of a new contract low for the August contract. Feed grains, a little change, actually starting to drift a little lower now. Corn is about 3 lower, sitting near session lows, while wheat prices are also 2 to 3 lower. We continue to see a broad range of production estimates from Brazil for their corn crop. However, the trajectory of these forecasts are the same, and that is higher. Recall the USDA earlier in June held their production estimate at 130 million metric tons, likely awaiting further harvest results. Yesterday, StoneX, they raised their production forecast another 2.1 million metric tons to 136.1. South American consulting group Solaris, they raised their production forecast a whopping 12.2 million metric tons to 147.6. And they aren't even the highest production estimates floating around out there. Recall last week, Agro Consults, they raised their forecast to 150 million metric tons. So I'd expect the USDA to resume raising their estimate, probably in the neighborhood of 3 to 5 million metric tons in next Friday's WASI report. The big, beautiful bill passed the Senate yesterday, but is now off to the House, where representatives today will debate the bill and likely vote on it later today as well. Also later today, the EIA will report weekly ethanol production, which is expected to come in very close to last week's 318 million gallons. After the close yesterday, the USDA reported that there was just over 449 million bushels of corn used for ethanol production in May. That was in line with expectations. This brought cumulative usage over the first 9 months of the 24-25 marketing year to 4.08 billion bushels. That's up less than 1%, in line with the USDA. Right now, I see no change to that USDA usage forecast of 5.5 billion bushels. Also after the close yesterday, census crush in May at nearly 204 million bushels. It was slightly below expectations. Total crush in the first 3 quarters of the 24-25 marketing year at 1.845 billion, up 5.9%, in line with the current pace outlined by the USDA. To reach the USDA estimate of 2.42 billion bushels crush in the June through August timeframe, we'll need to reach 575 million bushels versus 545 million last year. For now, I see no change to the current USDA forecast. However, I would lean higher. Bean oil stocks slipped to 5% to 1.876 billion, in line with expectations. U.S. weather remains non-threatening. Temperatures roll back to near normal levels in week 2 of the outlook for much of the nation's midsection, ideal for corn planting. Much of South America is dry over the next 7 days, and enabling corn harvest in both Argentina and Brazil to accelerate. Wheat areas of Argentina will need rain, and they do have better prospects for rain here in week 2. Inside trade overnight for D's corn. Price strength will likely be hard to sustain, with production prospects growing in both the U.S. and Brazil. Speculative shorts, however, are approaching a short position of near 200,000 contracts. Nove beans back above the 100-day moving average overnight. Even with only slightly lower acres, it becomes critical trendline yields are achieved this year to prevent stock tightening. Beans should continue to outperform corn. Oil demand will likely shift back to domestic usage into biofuel production and away from exports. And I think wheat has some good underlying support given the sizable reduction to harvested acres here in the U.S. on Monday. Thanks for listening, everyone, and I hope you have a great day.